I'm really thrilled to welcome our next guest on the program today, none other than Michael Saylor, who is, I would say, you've kind of become like the godfather of the Bitcoin industry. You sort of single-handedly have made this something very real and something that's going to move us into the future. And you just have an incredible background. I just want to point out, for those that don't know Michael, he was at MIT, had a double degree in none other than aeronautics and astronautics, as well as science, technology, and society. And in his free time, he managed to play guitar in a rock band and fly gliders. So truly a real Renaissance person. He happened to be there as well on a full Air Force Reserve Officer Training Corps scholarship there at MIT. You're the whole package. And now you've taken your company to levels that I think people probably never dreamed of. You were one of those folks back in the day that thought Bitcoin was nothing, was some kind of pipe dream nonsense. And now you're betting your whole future and your company's future on it. So tell us a little bit about why you made that decision in summer of 2020.
One of the rules of Bitcoin is that Bitcoin's on a need to know basis. You have to need to know about Bitcoin before you'll open your mind to it. It's a paradigm shift. And I would refer to it as digital energy. But if you think about it, the first time we figured out how to channel energy in cyberspace, it's just as profound as if you went to somebody in 1800 and said, one day we're going to have this clean, silent electricity, and you're not going to be able to see it or touch it, but it's going to power every single machine in your factory, and it's going to power everything in your house. And you would think, I don't get it, I don't need it. And until someone shows you what it can do, and until you get to the point where you do need it, you're not going to embrace a new form of energy. And so MicroStrategy didn't really need Bitcoin until 2020. And then during the COVID lockdown crisis, we realized that all of our capital was kind of a melting ice cube. We had a lot of money that was generating 0% interest, losing 15 to 20% of its value a year. So we had a need to know. And then we started thinking, maybe there's something else we can invest this money in. And we discovered Bitcoin, which I think is digital capital. I mean, the most powerful application of digital energy is capital. So we needed it, we found it, we embraced it, and we've become the largest public holder of Bitcoin.
I know you tweeted out something years earlier saying, this is really nothing to write home about, and you thought it was just kind of a scheme, and all of a sudden you realized, maybe because of 2020, right, that this actually was the future.
What I say is everybody's against Bitcoin before they're for it. And your first reaction is always to be skeptical. And after an hour, you're not quite sure. But after 10 hours, you think maybe there's an asset there, but you don't know how you feel about it. And after about 100 hours, you start thinking, this is like a digital monetary network. This is like Facebook for money. And so I would say I started skeptical. And then because I had a need to figure it out, I became a believer.
You talked about it as a digital asset. So where is its real value? I mean, sort of, there's a lot of philosophical takes on this, but how does it that it comes to have real value?
Well, so first of all, what Satoshi discovered was how I send something of value between two different individuals without a trusted intermediary. So that's known as solving the double spend problem. But if I want to send $1 million from me to you without a bank, Satoshi solved that. But inadvertently, when Satoshi solved that problem, Satoshi figured out not just how to send $1 million from New York to Tokyo without an intermediary, but how to send $1 million forward in time 30 years without an intermediary. If you can transfer something without an intermediary, then you can store something without an intermediary. So the killer app of Bitcoin is the store of value in cyberspace. And what's that worth? There's about $900 trillion worth of wealth in the world, and about half of it is used for its utility value. People buy assets for their utility. They buy houses and buildings and boats and planes and pieces of art because they want to use them, look at them. But the other half of that wealth is assets that are purchased as a long-term capital investment or as a store of value. So $450 trillion of the world is long-term capital. And so if I take you and I drop you in Africa and I say, here, take $100 million, buy anything you want anywhere in Africa, but you got to keep it for 30 years. And, then I say, or you could have the same $100 million invested in the US. Most people would say, well, that's a no-brainer. I'm going to keep the money in the US. There's nothing I want in Africa that's as valuable as property in the US. But what if you can't have property in the US? Then what if your choice is I can have 100 million worth of Bitcoin in cyberspace? I can have 100 million worth of digital property, or I can have 100 million worth of land in any country in Africa, or any building or any company or any bond or any currency in Africa. And the answer, when you think about it, is there's nothing you want in Africa that's better than having digital property in cyberspace. And there's certainly no place where you're going to trust your money or your assets for 30 years, much less 100 years, much less 1,000 years. So when you start to ask the question, where do the 8 billion people on the planet and where do the 300 million corporations on the planet, where are they going to store their capital if they don't have recourse to the United States and, property on the Upper East Side? The conclusion you come to is I'm going to put my money in cyberspace. And so Bitcoin's real use is it's digital property in cyberspace. It is cyber Manhattan. It is a place where you can store your capital and give it to your great grandchildren. And you know that you're not going to be taking risk against a bank as a counterparty or another company or country or currency or culture. When you don't want to take risk, when you don't want to make an investment, when you don't want to bet on the direction of the commodities market, when you just want to store some money for 100 years and forget about it, well, you put it in the safest bank in the universe. And
quick reminder to go over to 76 Research, our financial website, where you can get a whole lot of information about financial markets and what stocks we like to invest in. Lots of different content there. Just a quick look at our top financial pick, up 24%, utility up 24%, real estate up 23%. You get the picture. It's important to put yourself and your financial future first. You can do that at 76 Research, just $1. It costs just $1 with code word dollar, $1 a month for the first 2 months. 76research.com. I'll see you there.
And Bitcoin is
okay. You say it's the safest.
Cyberspace.
I have to jump in with the question that everybody worries about, right? What if it gets hacked? And I know before everybody jumps on me, like it's pretty much not hackable, but we're living in different times and there's all kinds of crazy AI productivity gains. Is it really and truly safe?
Well, the question that you're asking is the same question that I had to ask as the fiduciary responsible for $500 million of my shareholders' money back in 2020. I said, sure. Before I invest in this, is it going to be hacked? Is it going to be banned? Is it going to be copied? Those are the big three questions. And it's hard to know that in the first year of the network, but we're now approaching year 16. It'll be the 16th anniversary of the network on Halloween. That's the 16th anniversary of the white paper, that is. And
Satoshi Nakamoto, by the way, not everybody knows that, but Satoshi basically came up with this. We don't really know if Satoshi was a real person. I'd be curious to get your thoughts on that, or whether it was a group of people, but amazing, obviously, discovery. Continue.
So after 16 years, it has been copied 10,000 times. They all failed. It's the winner, right? It's the network that all the smart, rich people in the world chose. It's the bank in cyberspace. If you show up in a city and there's 10,000 banks and you have a bunch of money, and the question is, which bank should you put your money in? You go find every smart, rich person that you know in the city and you say, hey, where do you put your money? And if they all put their money in one bank, you're probably not going to put your money in a bank that's a million times smaller than them, that only has poor, stupid people. So it was copied. It's the winner. It is the bank that's of choice of the smart money in the world. And will it be banned? You couldn't know that for 15 years, but the IRS legitimized it as property in 2014. The SEC approved a host of Bitcoin ETFs in January of 2024. Today, it's held by nearly 100 publicly traded companies. Every major regulator has certified it as a commodity, not a security. That was a judgment by the former head of the SEC under Trump, and that's the judgment of the current head of the SEC, Gary Gensler. So it's not getting banned. And that takes us to the third question: is will it be hacked? And Satoshi's got about $70 billion in a bunch of wallets that any hacker could have if they could crack the code. And it's been there for 16 years and nobody's cracked the code. It hasn't been hacked. And the reason it hasn't been hacked is because it's defended by a wall of digital energy, about 730 exahash. That's more computer power than all of the computers that Amazon or Microsoft or Apple could, working jointly together, could generate. So it is the strongest wall of computer power in the world, stronger than any nation state can muster, stronger than any company can muster. And that computing power, combined with the fact that there's approximately $800 billion of actual money deposited in this bank over the past 15 years, combined with hundreds of millions of holders, combined with about almost 20 gigawatts of electricity, which is like 20 full-on nuclear reactors. 20 gigawatts is more electrical energy or more pure energy than drives the entire U.S. Navy. That's how much power it is. So Bitcoin's really defended by power, a lot of power in political, economic, digital, and electrical form. And there's no way to finesse it. You can't kind of spoof it or trick it. You just need 10 times as much computing power as exists on the surface of the earth in order to crack it. That's why no one's cracking it.
How do you think? I mean, you know a lot more about this than I've ever dreamed of knowing. I'm fascinated by it. I've been fascinated by it since it first emerged, and I remember reporting on it when it was $10. But and now you're looking at 60 some odd thousand these days. How do you think it got started? I mean, do you believe the whole Satoshi Nakamoto as being one person, multiple people? And how do you get yourself comfortable around it, not really understanding for sure its origins?
There's a dream throughout the history of the human race of sound money, of money with integrity, something you could trust, something that you could store your life savings in and not have debased or destroyed or stolen from you. And that sound money took the form of gold after about 5,000 years. And throughout human history, the better civilizations have stood on the gold standard. And economists have always tried to create the perfect money. Gold was the closest thing to perfect money, but it was always imperfect because you could mine more gold and it's centralized. It was easy to steal gold and it was very slow to move. It would take a year to move gold. So there was this dream in the economic community of perfect money. And it was impossible to create perfect money or clean, sound money until the invention of the internet, combined with the invention of public-private key cryptography, combined with the invention of semiconductors. And so Bitcoin represents the engineering of perfectly sound money. And it was only possible once those three technologies advanced. And there was a group of cypherpunks that were playing with cryptography, playing with the internet, and they saw the development of hashing algorithms like SHA-256 and the ability to build that into an application-specific semiconductor. And they probably tried this 40 times. There were products like Hashcash and digital gold and Bitgold and things like that. And the first 30 or 40 of them failed. And then after about 40, some Bitcoin came along, and Bitcoin learned from the failures of the 40 before it. And it was the first truly decentralized crypto monetary network. And it was lucky because it just had the right monetary policy, which is absolute scarcity, 21 million. And it had the right frequency, a block every 10 minutes, the right bandwidth, the right protocols. And, when it was launched in January 3rd of 2009, did we know it was perfect? No, nobody knew it was perfect. In fact, it didn't trade for a year and a half almost. And the first time it was used for transactions was Pizza Day around May of 2010, where somebody bought 2 pizzas with 10,000 Bitcoin. So at that point, 10,000 Bitcoin, $700 million worth of Bitcoin was traded for 2 pizzas.
Yeah.
And then people thought, well, maybe it's something, but it's still kind of a hobby. And it took another decade before it wasn't a hobby.
Well, and
hence,
you also had
a crypto
people,
network comes to life.
sure, and you had people going to jail. You had, a lot of concern about the regulation around it because you were able to sort of trade, if you would, on that deep dark web, and it was a currency, quote unquote currency, used there, and that got some people in a lot of trouble. And then eventually, I think it just kind of kept catching on and catching on and catching on. And it's something, right? When you have BlackRock and Larry Fink coming out saying, I like this, and I'm creating an ETF for it. I mean, some people that are sort of diehard Bitcoin folks might look at that and say, I don't want government involved. I don't want financial markets involved. I look at it and I say, I welcome that, right? Because I want some structure around it. I want some regulation. I want to be able to easily invest in it and not have to go find a hard wallet somewhere. Although nothing wrong with that too. But in other words, that liquidity that, say, an ETF or investing in your company in MicroStrategy might represent, that's worth something to people.
I think if you look at it like fire, a lot of people got burned when they played with fire. If you look at it like electricity, a lot of people got shocked before they figured out how to handle electricity. If you look at the early automobile, people were terrified of them. And then all of a sudden, in about 15 years, everyone loved them, even though a lot of people die on roads every year driving cars. So all of these are new technologies that are transformational. Bitcoin right now is spreading very rapidly as digital capital, and it's digitally transforming the capital markets. And BlackRock is an example of one form. MicroStrategy is another company digitally transforming the capital markets. And yet still 95% of the Bitcoin is held in self-custody by Bitcoiners, and it's not in those traditional areas. So this is a network that's spreading everywhere in the world.
It gets me to your valuation. So you got a pretty high valuation. Walk us through it. 13 million a coin. Is that, I want to make sure I'm quoting you right. And the year 2045, walk us through why you think there's so much appreciation coming.
Yeah, we created a model which we uploaded to GitHub. It's in the open source community. It's called Bitcoin 24. You can just Google it and go grab it. It's an Excel spreadsheet, and it has macroeconomic models for the next 21 years, a Bitcoin forecast for 21 years, and then micro models for corporations and individuals and institutions and even nation states. And once you download that model, you can plug in your own assumptions about what you think is going to happen, and you can come to your own conclusions. But my assumptions are the U.S. dollar supply is going to continue to expand about 7% a year. And that is the historic rate of expansion of dollars for the past 100 years. That's how I arrive at that. That's just how fast the money supply is expanding if you look at M2. And I think that there'll be innovation from AI. So some things like equities will probably grow a little bit faster because AI is going to have a boost to equities. I think over time, gradually, technology is going to demonetize gold and some of the other stores of value assets that were used in the 20th and the 19th century. But the 21st century, we're going to digitally transform property and transform gold into digital property, digital gold. Okay. And when you look at Bitcoin's growth over the past 15 years, It's been growing more than 100% a year for the first decade or so, and for the last 4 years, it's been appreciating about 50% a year in ARR. I think it's 50% a year in ARR, and it's 50 vol, which is like three times the volatility of the S&P and three times the performance of the S&P index. Okay. Over the next 21 years, I think it will grow faster than the S&P, and it's going to grow to the point where it's about 7% of the world's assets. Right now, it's about 0.1% of the world's assets. And I think that it will gradually approach, but it will never be as big as the S&P index or equities. It won't ever be as big as real estate. But in that world where it decelerates from 50% down to 20%-ish, it will appreciate from 65 or 70,000 up to 13 million a coin in my base case. And that amounts to about a 29% ARR on average over the 21 years. And when it's half the size of the S&P, it'll still be twice as volatile, probably performing 50% better, because it's a 24/7, 365 asset. It's subject to global chaos and global capital flows, and it doesn't have all the risk factors of property or the risk factors of equity to hold it back.
One of the things that I struggle with is trying to understand how it is sort of a safe haven, because the way you're defining it, it really is something that's a store of value that you can count on through thick and thin, through time, effectively. And yet it's super volatile. And I get, like, the traders love it, right? Because volatility is your friend. But if you're just, mom and pop investor at home and you're thinking about, all right, I have a little bit, and I want to be careful because I'm not anybody's investment advisor, but I think you got to be cautious and thoughtful about what you're doing. But if you're like, I'm going to try this, you got to also be willing to, I guess, stomach the ups and downs. And my question is, at what point do those ups and downs stop if you're going to get all the way to 13 million?
Yeah, well, first of all, Bitcoin's like 50 vol, 50 ARR, and the S&P's more like 12 to 14 ARR, 14 vol. So if you want 12 vol, 12 ARR, you would just buy a diversified equity index. You'll get 1/4 the return. You'll get 1/4 the volatility. And some people like that. If you're going to buy a 50 vol asset, first of all, you shouldn't buy it unless you're going to hold it for the long term. Like, a short period of time to hold it is 4 years. A middle period of time is 10 years. The right time horizon is the rest of your life. If you have money that you need to give to your children in 4 weeks, don't buy Bitcoin with it. If you have money you want to give to your children in 40 years, definitely buy Bitcoin with it. In 40 years, Bitcoin is going to be worth a lot more. In 4 weeks, there's no telling what it'll be worth. So think in terms of 0 to 4 years is very safe, conventional assets. Think in terms of 4 to 10 years is more like investment things, and think beyond 10 years is that's something I'm buying to give to my great granddaughter, that it's going to be in the family for ever. It's like the center of London. It's been passed by the royal family of London down from family to family for 1,000 years. That, if you think of it like that, then you'll go into it with your eyes wide open. It's the volatility is a feature. It's not a bug. The reason it's volatile is because on Saturday night, if you panic and you needed to raise $1 million by selling $1 million of something you own, it's literally the only thing you can sell. You can't sell anything else. You can't sell your real estate. You can't sell your Apple stock. You can't sell your car.
That's so true.
There's nothing else you can sell. So if you can't sell it, then by definition, it's not going to be volatile because it's useless. So things that are non-volatile are useless. The volatility is what attracts the Bloomberg jockey to put up $20 billion of capital in Singapore. And that person will loan you $1 billion for 5 minutes on Saturday night at 100x leverage if your life depended on it. And you can imagine that, is that a feature or is that a bug? It's just a lot of economic power. And the fact that there's that much economic power in the network means that it attracts all of the traders, and it attracts anybody that wants to either buy or sell with leverage at any time, anywhere in the world. Once you embrace that idea, you realize that if you wanted to buy it knowing what it would be worth next Tuesday, you're a fool. But if you wanted to buy it thinking this is the most powerful digital capital network in the world for the next 100 years, and I've got a long time horizon and I just want to get rich and I'm going to hold on to it, then it's a pretty wise thing to put in your portfolio.
You never sell, do you, at MSTR? This brings me to MSTR because I'm looking at your stock price and it's multiples of where Bitcoin is. In other words, we've seen Bitcoin trading higher and higher even just over the last 6 weeks or so, but MSTR is trading that much more higher. Explain to me why it is that your company is trading ahead of Bitcoin and what it is that you guys are doing that is attracting so many investors in the community.
When you have trophy assets, you never sell them, right? Bernard Arnault never sells any of the brands of LVMH, right? When you own the New England Patriots, you don't sell it. You try to gift it to your great-great-grandchildren if you can solve the tax issue. The royal family of England doesn't sell the Middle of London or Kensington Palace or Buckingham Palace or the like. So you don't sell things that are scarce and desirable that everybody in the human race is going to want. You buy and you hold them forever. MicroStrategy is a Bitcoin treasury company. What we do is we raise capital via cash flows from the business, from equity, by issuing debt, by doing fixed income financings, and then we buy Bitcoin with it. And the people that buy our equity want high performance Bitcoin and high volatility Bitcoin. So we give them more volatility and more performance. And then other people that buy our fixed income instruments, they might buy a convertible bond. They want more security. They want a risk protection. They want less volatility. They want some of the upside, but they would rather have downside protection and give up some of the upside. And they can't really buy the equity. And then, of course, there's some people, that are option trader. They want 10x the volatility. So some people want extreme leverage, extreme volatility. Other people want very little leverage. They want a lot of risk protection. So MicroStrategy splits the capital, or it refines the capital such that we provide one set of investors with a lower volatility, lower risk way to participate, and then another set of investors with high voltage methods to participate.
Do you see yourself in competition with ETFs at all? What do you think about all the ETFs that have come out? And what do you say to investors that are like, gosh, like I'm just blown away. I need to go back and rewatch this 5 times to digest it all. I mean, people say, well, I can't get my head around it. I don't understand who Satoshi Nakamoto is. I don't understand what this is. Do you think that more needs to be done in terms of educating the public, or, you build it and they will come?
Well, as to the first question, no, we don't compete with the ETFs. They basically sell spot Bitcoin exposure. If you want 50 ARR, 50 vol, 100% upside and downside as a simple digital property instrument, you would buy the ETF, and they're perfectly fine investments. I mean, very straightforward. If you want high performance equity or optionality, you would want our equity or the options that trade above our equity. And if you want Bitcoin backed bonds or some kind of Bitcoin fixed income instrument, you would buy something that we were selling. So we're very complementary to them. And of course, both investments work well, because at the end of the day, all the money invested in any of these instruments is used to buy Bitcoin. And there's only 450 Bitcoin available for sale every day by the Bitcoin miners. So when that Bitcoin gets purchased, you have to take the price up in order to find another willing buyer at a higher price level. So that's a very virtuous competitive cycle there, and we're very complementary. With regard to my suggestions for potential investors or people that are interested in Bitcoin, I would say before you put money into Bitcoin, put time into Bitcoin. If you go to hope.com, remember, Bitcoin is hope. You can find lots of courses on Bitcoin, lots of books on Bitcoin, lots of videos on Bitcoin, lots of research papers and resources on Bitcoin. You could just go and Google me on YouTube, and you'll find lots
or Michael.com,
of videos.
Right? You got Michael.com.
Yeah. Go to Michael.com, go to hope.com, read the Bitcoin Standard. The big idea with Bitcoin
I just got the book, by the way, and I got it because I knew that was very influential for you, and I wanted to read it ahead of talking to you. Amazing book, really interesting. And for people who are very interested in sound money, as I know so many of my listeners and viewers are, Michael, it's a really worthwhile book because, it's getting into the gold standard and the dangers of money printing and central banks, etc.
Yeah, the great thing about studying Bitcoin is you won't really understand money until you've seen perfect money. So Bitcoin takes you down this path of the theory of money, and then you start to understand what's bad money and why it's bad, and what's good money and why it's good. And then that'll take you into the theory of investment. Like when you actually buy a bunch of corporate stocks to save your money, you're not saving, you're investing, you're making a bet on the stock. And so you start to understand the difference between saving your money and investing your money. And then once you understand the theory of investing, you start to understand the theory of assets. What's the difference between a commodity and a security? And why is a commodity normally a crappy investment unless it's Bitcoin, in which case it's a good investment? And then you start to understand commodities versus scarcity. So all of the investment theory, economic theory, and monetary theory that comes about when you understand Bitcoin will cause you to realize Bitcoin is just a better idea. And it will also help you make your investment decisions and make your savings decisions and navigate geopolitical currency markets and understand why does one government crash and burn, and why does hyperinflation take place one place and not another place, and how can you insulate yourself and your family from that?
Final question to you. The dollar, a lot of people are watching their dollars just evaporate in terms of purchasing power. And it's one of the reasons why one of the reasons why you guys were looking for alternatives as we go increasingly into this complex geopolitical situation. And, you get Putin over there entertaining everybody saying, okay, well, you can't use dollars and you can't use credit cards. And there's this jockeying for who's going to be the currency of the world, so to speak. And the dollar comes under pressure. Is Bitcoin the answer, do you think? Is that the currency of the world for the future? And does it undermine or threaten the hegemonic power of the United States?
Yeah, I don't think Bitcoin threatens the U.S. I think Bitcoin is strengthening the U.S. I think that if you look at all the currencies in the world, the strongest currency in the world is the dollar. And so everybody in the world has either got a weaker currency, which is collapsing, or they're on the dollar standard. Like the euro is pretty much pegged to the dollar, the Singapore, the DROM, most of the quote unquote good currencies, the Swiss franc, et cetera, they're pretty much pegged to the dollar. And then the bad currencies, the weak currencies, the peso, the naira, Egyptian pounds, Lebanese pounds, Turkish lira, they're collapsing against the dollar. So it seems pretty clear that the dollar will continue to spread. But there is an inflation problem. The inflation rate in dollars is not the CPI. It's not 2 or 3%. The best way to think about monetary debasement is to look at the S&P index. If the S&P is advancing 12% a year, that's the rate at which the money supply is expanding in dollars. So your hurdle rate, the rate at which you have to generate an investment gain in dollars in order to not get poorer, is probably the S&P index. That's the cost of capital. And that's a pretty good surrogate for the rate of expansion of the US dollar M2 money supply. So over the last 100 years, the S&P index generally expands about the same rate that the dollar expands in money supply. So if someone gives you an idea to generate 3% after tax buying bonds at 5% that are 3% after tax, that's kind of like underperforming the cost of capital by 9%. You're getting 9% poorer every year. So anything that isn't beating the S&P index is making you poorer in dollar terms. What's beating it? Well, I mean, the S&P, when you invest in the S&P and your money goes up 10% a year with the S&P, you think you're getting richer. No, you're just staying rich. You're staying as wealthy as you were. The Magnificent Seven's beating it. So over the last 4 years, maybe the S&P's up 13, 14%. The Magnificent Seven's up 25, 26%. It's doubling it. This is a no-brainer. It's obvious, right? NVIDIA and Apple and Google and Microsoft and Meta, those are monster stocks, and everybody knows they're the most powerful companies in the world. So they outperform. Everybody else in the S&P underperforms. So 1% of the companies generate most of the gains. The other 98, 99% don't really generate much gain. Bitcoin's doubling the Magnificent Seven. So in terms of is Bitcoin the answer? Yeah, sure. If you want to beat the S&P index, you need something better than a typical good company. A well-run company will at best keep up with monetary inflation. You need a monstrous digital monopoly like the Magnificent Seven to outdo it. But the greatest digital monopoly in the world, Trish, is the digital monopoly of money. I mean, the greatest digital network in the world is Bitcoin. Bitcoin is Facebook for money, right? It's Google for money. If all the smart, rich people in the world decide that they want to store their money in a bank in cyberspace that will never be debased and hold it for the next 100 years, right? Isn't that the best investment by definition? Because every other company has some kind of crack in its armor, some kind of attack surface. All the other companies get taxed. They have employees, they have headquarters, they get hit with tariffs and fines and et cetera. So find me a big tech monopoly that is global, that sells a product that everybody wants, nobody can stop.
It's you.
And
it's
nobody
MSTR.
Understands. No, it's Bitcoin, Trish.
Well, Bitcoin, but I mean, you guys,
Bitcoin
you first
is
the party
the
there, and we've
monster.
talked about this, you and I, off camera. But I mean, how do you? Nobody else can kind of get in at this point, right? It's very hard, I should say. You've kind of got some dominance in this space. You were the first to really embrace this. So, theoretically speaking, assuming this all plays out, I guess MSTR is well positioned.
Well, so I just framing this, right? Bitcoin is digital capital going from 1.4 trillion to 14 trillion to 140 trillion. That's the asset class. That's the big idea. That's the groundbreaking transformation. MicroStrategy is a Bitcoin treasury company. What we're doing is securitizing Bitcoin. We're offering fixed income instruments or high performance equity or high leverage derivatives that appeal to all of the capital markets participants. Since there are lots of people with pools of money, they have to trade options, they have to trade convertible bonds, they have to buy equity, they want fixed income. So MicroStrategy is converting what you'll call crude capital into refined capital. Think crude oil goes in one side of the refinery, and gasoline and kerosene and toluene and 27 petrochemicals come out the other side of the refinery. And so we're happy to do our part, but the big invention is crude oil, right? We discovered infinite energy, in liquid form. MicroStrategy is a company commercializing crude capital, and crude capital is just higher performance than the thing it replaced, which was like, digital capital is better than analog capital and will be.
Yeah. Fascinating. Oh, by the way, we got an election coming up. Does it matter? Does it matter to the price of Bitcoin who wins?
Bitcoin's been universally accepted as a digital commodity, as an asset without an issuer, and it is the reserve asset of the entire crypto economy, and it is the most widely held global investment asset in the world. So it wins no matter what. Either outcome will be good for Bitcoin. it's going to continue to move up.
That's an interesting aspect to it too, because as you try and gauge what's going to happen economically, depending on who's there or who's not there, you want to find an asset that can hopefully manage through thick and thin. So this is just fascinating, absolutely fascinating. Michael, I hope you come back. I hope you come back and we can talk some more, because, look, I could talk to you all day about this stuff. I just think it's really interesting, and you're on the cutting edge of just big things to come. So we appreciate you taking the time today.
Well, thank you, Trish. I enjoyed our time together.
Good stuff.